Gold $10,000 in currency reset as China and Russia buy gold and overwhelm gold futures manipulation. This is the important video update that we're bringing you today. Hi, I'm Mark O'Byrne, Research Director of goldcore.com, your precious metals specialist. And we think it's important to cover the recent developments of the gold market. Just in recent days, some very significant developments. One of which is Russia have sold nearly half of their US Treasuries in just 1 month, over $40 billion worth of US Treasuries that they sold in April. And then they followed up by buying 600,000 troy ounces of gold in May. And this is a very important development and something that Russia has been buying a lot of gold for many years now. Their gold reserves have gone from near 0% because they had very little gold reserves to about, I think they're about 17% of their gold reserves are now, of their foreign exchange reserves are now in gold. So it's increasing from a very near zero base, very low base. And we believe this trend is very, very sustainable, particularly given the increasing economic risks and geopolitical risks in the world and the huge tensions between the Western world and the US with Russia. So this is a very important development. And then the second big development is that James Rickards, the well-known expert on monetary policy, economic policy related to currencies and central banks, and indeed gold, and the expert on the coming global currency reset. He has issued a report through Agora Financial Gold Speculator, basically saying that the IMF has already pegged gold to the SDR, that they are manipulating the marketplace in order to create this peg. I think it's 900 SDRs to 1 ounce of gold. And Jim just came out with this report recently, and we think this is hugely important. A lot of people have been talking about this currency reset for a long period of time, and it looks like we are slowly but surely seeing it come to pass. So why is this significant? Well, I think it signals that the concerns many of us have had about the US government and the indebted position of the US government, which is going parabolic in terms of, if you look at the chart of US debt, it is just, it's going vertical at this stage. It went up $1 trillion per year, roughly under President Bush, George Bush II, W, and then it went up $1 trillion per year under Obama. And just in the last 18 months, it's gone up another. It's up to 21.2 trillion basically. So, and meanwhile, the foreign exchange reserves of the world, the entire global savings of the world, are essentially flatlining. So ultimately, the dollar is going to devalue versus gold, and the question is, how does that happen? Does it happen in a disorderly manner, or does it happen in a more organized manner involving a currency reset? So the Russian gold demand is very, very important. It's not just Russia. It's a lot of emerging market nations, large creditor nations have massive dollar reserves, and they are basically diversifying into gold. Turkey, Kazakhstan, other former Soviet bloc nations, and we believe the trend is very sustainable because they still have very small foreign exchange reserves vis-a-vis their overall reserves. And it's worth remembering that the US is the biggest holder of gold in the world today, with 8,100 metric tons, which are alleged to be held in Fort Knox and the New York Federal Reserve. They haven't been audited since the 1950s, so it may or may not be there. That's yet to be proven, but they have putatively reported they have 8,100 metric tons, and the ECB and the euro area banks have over 10,000 metric tons. So that's 55% of the euro area central bank reserves are actually in physical gold. So we believe this trend is very, very in its infancy, in effect, and it may accelerate given the degree of economic and geopolitical tensions in the world. So it's a very important trend. And the elephant in the room is China. China is quietly buying gold. The People's Bank of China, it's believed, are quietly accumulating gold. And they have only reported 1,000, I think roughly 1,850, 1,900 metric tons. But we believe that they will announce in the coming months and years that they have increased their reserves to 4,000 or 5,000 metric tons, and I think that might be the signal to much higher gold prices. And it's important to consider the context here, and the context is a very, very small physical gold market. So all the world's gold, all the world in the all the world in the gold, all the gold in the world that's ever been mined since the dawn of time, would basically, if you refine it and you make it into one giant cube, it would be 21 meters cubed. It would fit on the centre court of Wimbledon. It would be 2 Olympic swimming pools. So gold is much, much rarer. Physical gold is much, much rarer than people realise. And there are roughly, there's different estimates, but there's roughly 80 to 100 claims on every 1 ounce of gold in the financial markets. And in the futures market, the leverage is roughly 80, 90 to 1. So gold is very rare. And therefore, when you see large central banks, the largest creditor nations in the world, such as Russia and indeed China, and China is the elephant in the room in this regard, diversifying into gold, all it takes is a little bit of diversification from their foreign exchange reserves into physical gold to result in much, much higher gold prices. China has over 3 trillion of US dollar reserves. Russia has over nearly half a trillion, I think something like 450 billion. It is, 450 billion. Just checked that before I went on. So 450 billion. They've half a trillion. And the amount of gold they bought recently, the 600,000 troy ounces, that only amounted to something like 750 million. So it's tiny vis-a-vis the amount of foreign exchange reserves they have. So I believe that this trend, given the huge geopolitical tensions and economic and trading tensions, I think that they will now resort to accelerating their diversification out of US Treasuries and into gold. And I think that will result in the US in time having to revert to quantitative easing. It has huge ramifications for the bond market, for risk assets in general, and I think it will actually ultimately overwhelm the manipulation of gold that we've seen in the futures market in recent months and years. A good way of thinking about this manipulation of the gold market is a bit like a beach ball, and that image of a beach ball being pressed down underneath the water, pushed down towards the bottom of the sea. The more you push it down, the more it's going to bounce out of the water and shoot much, much higher. And we believe that's because it's been artificially suppressed. And we believe that's what's going to happen to the gold price in the coming months and years. We're going to go much, much higher. Obviously, the currency reset experts, many of them are talking about gold at $10,000 per ounce. Ultimately, nobody knows what price it will go to. It will go to $5,000, $10,000, $20,000. Nobody knows, and we shouldn't be focused on the price and trying to predict exactly what the price will be per se. It's more the value, and the value is when we see this currency reset, we're going to see problems in the bond market, we're going to see problems with risk assets, and you're going to see basically ultimately fiat currencies are going to be devalued in a very, very significant way. So it's important that you own physical gold to hedge yourself against these risks, very real risks, and own gold, physical gold. There's no point. Gold is a safe haven asset, but it's only a safe haven asset if you own it in a very, very safe way. So the manipulation will end, as it always does. Gold prices below $1,250 per ounce will be looked at as an absolute gift in the coming months and years. So we would advise people, if you're going to diversify into gold, time is of the essence. You know that this is going to happen. We may be in the early stages of a currency reset happening, as Jim Rickers is alluding to. So get positioned. Get gold, own gold in the safest way possible, and you will be hedged against these risks. And you can stay up to date with all the latest news and breaking important developments in the precious metals market and the wider markets by subscribing on our YouTube channel, hitting the notifications bell, liking us on the usual Facebook, Twitter, LinkedIn. We're active in all these channels, and indeed signing up for our award-winning market updates on goldcore.com. If you have any questions or queries at all, we endeavour to answer all questions from subscribers and clients. Feel free to send us an email at info@goldcore.com. I'm Mark O'Byrne. Thanks for your time today, and take care of yourself. Bye-bye.